Welcome to the deep dive. We know you're here because you want to really understand what's driving change in the world, and you want to do it without wasting any time.
That's right. Efficiency is key.
And today, we're digging into something that's becoming increasingly critical to the future of energy. It might surprise you.
Yeah, nice.
We're going to move beyond just the usual discussion of wind and solar and really dive deep into carbon capture and storage, specifically how it's evolving within the upstream oil and gas industry, looking ahead to 2025 and beyond.
Absolutely. And I think, when most people hear cutting emissions, the first thing that pops into their head is probably renewable energy. And don't get me wrong, that's super important. But what's really interesting about CCS is that it's not just about reducing the carbon footprint. It's actually changing the whole game in terms of the economics and even what we consider viable oil and gas resources.
Right, right. It's like changing the rules of the game. And we've got some really interesting stuff to dig into today from the Oil and Gas Trends Report. This report, really breaks down some key trends and developments in the industry, and some of the things they're highlighting about CCS are pretty eye-opening.
Oh, yeah, absolutely. Some really fascinating insights.
So our goal today is to kind of unpack the major advancements that are happening with CCS. What are the actual implications we're already seeing in the real world, and what are the new opportunities that this is creating for companies that are, pulling oil and gas out of the ground in 2025?
Yeah, the companies at the front lines of energy production.
Exactly. So first, let's set the stage a little bit. What does the upstream industry even look like right now?
Okay, so the report paints a picture of U.S. crude oil production that's on a pretty solid upswing. They're projecting that we'll hit a pretty significant milestone, 13.5 million barrels per day by the end of this year.
Wow, that's a lot of oil.
It is. And as you might expect, the Permian Basin is kind of the star of the show. They're projecting that it'll contribute around 230,000 barrels per day to that increase.
The Permian, always the Permian. It's always in the headlines. Now, remember, we've talked before about infrastructure challenges in the Permian, especially getting all that natural gas out of there. Are those issues still kind of lingering?
Well, yeah, they are. It's still a major concern, especially when it comes to natural gas takeaway capacity. There just hasn't been enough pipeline capacity to keep up with the production growth.
Right, right.
But there is some good news. The report highlights the recent completion of the Matterhorn Express pipeline. And that's expected to kind of help alleviate some of that pressure, which should hopefully lead to more stable production levels, maybe even help smooth out some of the price volatility we've seen.
Okay, so some relief on the horizon. And while we're talking price, what's the outlook for oil itself as we go through 2025?
So right now, the projections are pointing to oil prices staying in a pretty stable range.
Right.
We're looking at something between US $70 to US $80 per barrel for the year.
Yeah.
But the report does say that we could see an upside of US $10 per barrel if, geopolitical tensions, those always have a way of shaking things up if those start to escalate. So, there's always potential for some volatility, but the baseline expectation is for relatively stable prices.
Okay, so we've got rising U.S. oil output, the Permian still leading the way, some infrastructure improvements, and oil prices that are, potentially volatile, but generally in a steady range.
So that right.
Now let's really dig into the heart of our conversation today, and that's CCS. The report makes a really big point of saying that it's becoming more and more critical to meeting those emissions reduction targets that everyone's talking about. Can you give us a sense of how big of a deal this shift really is?
Oh, it's a huge deal. We're seeing real-world examples of this transition already. You look at the Alberta Carbon Trunk Line in Canada, various initiatives that are, popping up all over the U.S. It's clear that there's a serious move towards large-scale CCS implementation.
Right, right.
But what I find really significant here is that CCS isn't just a box to check for environmental compliance. It's becoming a fundamental part of the whole upstream operation.
Yeah, the report actually uses this phrase. It says CCS is beyond emissions reduction. So for someone who's, maybe not super deep in the weeds of the energy industry, what does that actually mean?
It means that CCS is opening up doors that were basically locked before. Think about those oil and gas fields that have a ton of co-urazole mixed in. In the past, those were often just too expensive or too risky from an environmental perspective to even consider developing.
They were just kind of off limits.
Yeah, pretty much. But now, with CCS technology getting better and better, the whole calculation changes. these resources can actually become economically viable.
Okay, that's a really interesting twist. Can you give us an example of that actually playing out in the real world?
Yeah, so the report highlights the Sleipner field in Norway. It's been operating since 1996, which is, pretty remarkable in itself. But what makes it really interesting is that the natural gas they're producing there has a, get this, 9% CNO content.
9%. That's pretty high.
Oh, yeah, it is. But because they had the foresight to integrate CCS from the very beginning, they've been able to operate profitably, and they've stored, a huge amount of KRO, over 20 million tons, under the North Sea.
Wow, that's a pretty impressive track record.
It really is. It shows that this is not just some pie-in-the-sky idea.
Uh,
It's been working for decades.
Yeah, a proven concept. And even the Energy Transitions Commission, they're quoted as saying that CCS has a crucial role to play if we want to get to net zero emissions while still using fossil fuels. That's a pretty big endorsement from a pretty important group.
Oh, yeah, they're definitely a leading voice in this space. And to put it all in perspective, the Global CCS Institute, they put out a report in 2023 that estimated the CCS could actually handle like up to 17% of global key area emissions by 2050.
17%, that's a huge chunk.
It is. It is. And what's really striking for our conversation is that the upstream oil and gas industry, they're actually responsible for over 90% of the world's operational CCS capacity right now.
Wow, so they're not just talking about it, they're actually doing it.
Exactly. They're really leading the way in putting this technology to work.
Okay, so CCS is not just some niche thing. It's becoming deeply integrated into the entire industry. And the report then goes on to break down some of the key CCS technologies that are really reshaping how upstream operations work, especially as we look ahead to 2025.
Yeah, there are some really interesting developments happening.
And one of the first ones they talk about is enhanced oil recovery using CoRo. That sounds like, kind of getting two birds with one stone.
Yeah, it's often referred to as a win-win scenario. Basically, you take CO₂-EOR and you inject it into these older oil reservoirs that, aren't producing as much as they used to. And what happens is that the CO₂-EOR actually helps to mobilize that remaining oil, allowing you to recover more of it, oil that would have otherwise just stayed trapped underground.
Okay, I see.
But at the same time, a good portion of that injected CO₂-EOR gets kind of trapped within the rock formations of the reservoir, so you're effectively storing it permanently.
So you're boosting oil production and locking away carbon at the same time?
Exactly. You get more oil and you reduce emissions. It's a pretty clever approach.
Yeah, it is. So how much CO₂-EOR are we actually talking about storing with this CO₂-EOR?
Well, the report highlights a projection from the EIA, that's the Energy Information Administration, and they're, kind of the go-to source for energy data.
Right.
And they anticipate that just in the Permian Basin alone, we could see around 100 million tons of CO₂-EORs being stored every year by 2030, just through EOR operations.
100 million tons just in the Permian.
Just in the Permian.
Mm-hmm.
To put that in perspective, that's like, taking tens of millions of cars off the road permanently in terms of emissions. And all while getting more oil out of the ground, it really changes how we think about oil production, especially in those mature basins.
Right. It's not just about new discoveries anymore.
Exactly. And the report really emphasizes that this is particularly valuable for extending the life of oil fields that, might be getting close to the end of their kind of economically viable lifespan.
Right, breathing new life into them. So what's the next key CCS technology that the report dives into?
So the next one is high CO₂-EOR field development. We talked about that example in Norway earlier.
Right, the Sleipner field.
Exactly.
Yeah.
And we're actually seeing this become more and more common now. CCS is making these fields, which were basically considered stranded assets before, into potentially really profitable resources.
Turning lemons into lemonade.
Yeah, exactly. And there's another great example in the report, Malaysia's K5 field. This one has an incredibly high CO₂-EOR content, like around 70%.
70%. That means almost 3/4 of what's coming out of the ground is CO₂-EOR.
Exactly. But because of advances in CCS technology, Petronas, the company developing the field, is now looking at adding, get this, 80,000 barrels of oil equivalent per day to their production from this field.
That's a huge amount of oil that would have just stayed in the ground without CCS.
Absolutely. It really highlights how essential CCS is becoming in making these kinds of resources even worth considering.
And the Global CCS Institute, they point to the rapid expansion of CCS applications. And they specifically mention the role of, not just technology, but also the economic incentives that are making this more attractive.
Yeah, that's a key point. Those incentives, whether it's government tax credits or the rising carbon prices we're seeing in some regions, are becoming a bigger and bigger factor in making CCS projects financially viable.
Right. It's not just about good intentions anymore. It has to make financial sense. So the third key technology they talk about is offshore CCS hubs. This sounds like more of a collaborative approach focused on infrastructure.
Right.
What's the idea behind these hubs?
The basic concept is to set up these centralized locations, often using existing offshore platforms and pipelines that are already out there in mature oil and gas basins.
Okay.
And these hubs would act as kind of collection points for CO₂-EORs that's been captured from multiple sources, both onshore and offshore. So you're gathering all the CO₂-EORs, transporting it through pipelines, and then injecting it into suitable geological formations deep under the seabed for permanent storage.
So it's like a shared underwater carbon storage facility.
Exactly.
What are the big advantages of going with this kind of hub model?
Well, according to S&P Global Commodity Insights, this model has a lot of potential to kind of revitalize aging infrastructure in those mature offshore basins. So instead of having to spend a ton of money to decommission platforms and pipelines as oil and gas production declines, you can actually repurpose them for CO₂-EORs transport and injection.
Makes sense.
And that's a much more cost-effective way to scale up CCS deployment. Plus, it allows smaller emitters, companies that maybe don't have the resources to set up their own dedicated storage sites, to participate in CCS by connecting to these hubs.
So it's like democratizing access to CCS.
Exactly. It makes it more accessible.
Really smart. Now, the report goes on to showcase some real-world case studies that, really bring these technologies to life. And the first one they dive into is the Gorgon LNG project in Australia. This was a massive, massive undertaking.
Oh, yeah. It was enormous, like a $54 billion project. And from the very beginning, they designed it with a large-scale CCS system, specifically to capture around 3.4 million tons of CO₂-EORs each year from the natural gas processing operation.
Wow.
Now, the report does mention that there were some hiccups along the way, initial delays and some technical challenges getting the CCS component fully up and running.
As often happens with these big, complex projects.
Right, exactly. But the key takeaway, and this is highlighted by the Global CCS Institute, is that Gorgon really demonstrates that you can do this at a massive scale. You can integrate CCS into these huge upstream projects, especially in the LNG space.
So it's proof of concept at a massive scale.
Exactly.
Now, the next case study they highlight is Qatar's North Field expansion. Qatar is like a giant in the global LNG market, so adding CCS there seems particularly important.
It is. It's a really significant development. So Qatar Energy, the state-owned energy company, they're planning this massive expansion of their North Field, and they've set this ambitious target of capturing and storing over 7 million tons of CO₂-EORs per year by 2030.
7 million tons, that's a big number.
It is. And the IEA, they actually see projects like this, where CCS is built in right from the start, as part of the initial design of a brand new project, as absolutely crucial if we're going to meet those global emissions reduction targets.
So it's not just about retrofitting existing facilities, it's about baking it into the design from day one.
Exactly. It's becoming a fundamental part of how new energy projects are conceived and built.
And the last case study they talk about is particularly interesting. It's direct air capture in the Permian Basin, specifically Occidental Petroleum's 1.5 project. This is a bit of a different approach, right?
Yeah, it's a pretty significant departure from the other examples we've discussed. So,
Yeah.
those other projects are focused on capturing CO₂-EORs right at the source, like from industrial emissions. But direct air capture, or DAC, it aims to actually pull CO₂-EOR directly out of the air.
Right out of the atmosphere.
Exactly. And Occidental's project, it's aiming for a pretty impressive scale. The initial phase is targeting to capture 1 million tons of CO₂-EORs per year.
Wow. So like a giant air purifier for the planet.
Yeah, kind of. And the Energy Transitions Commission, they're really big on this whole idea of carbon capture, utilization, and storage, or CCUS. That includes technologies like DBAY, where the captured CO₂-EOR might actually be used for something else.
Okay.
And they see CCUS as like a vital set of tools for reaching those net zero emissions goals.
So it's not just about reducing emissions, it's about actually reversing the buildup of coaters in the atmosphere.
Exactly. It's taking it to the next level.
Now, let's talk about some of the challenges that still need to be overcome if we want to see CCS really take off on a wider scale. The report talks about some of the technical and economic hurdles that are still out there, and the first one they mention is reservoir characterization. So why is it so important to have such a deep understanding of what's going on underground?
Well, the big thing is making sure that when we store CO₂-EORs underground, it stays there. We need to be absolutely certain that it's going to remain trapped within those geological formations for, thousands of years.
Right, we don't want any leaks.
Exactly. Yeah. And to do that, we need to understand everything about the subsurface. The types of rock, whether there are any cracks or faults that could allow CO₂ to escape, how the CO will behave under pressure over long periods of time.
It's a lot more complicated than just digging a hole and dumping it in.
Oh yeah, it's incredibly complex. And that's where things like advanced seismic imaging and sophisticated computer models come into play. Companies like Schlumberger, they're developing AI-powered tools specifically to help with this process, to improve how we select and monitor those storage sites.
So AI is even playing a role in this.
Absolutely. And Global Market Insights, they really stress that these technological advancements are crucial, not just for safety, but also for bringing the cost of CCS down.
Right, making it economically viable. And speaking of cost, that's the next big challenge they highlight: cost optimization. The report says that right now, adding CCS to a project can add like $5 to $15 to the cost of producing a barrel of oil.
Yeah, that can be a big deal, especially for smaller companies or projects that are already operating on thin margins.
Right, it can make or break a project.
Absolutely. And that's why the continuous development of new CO₂ capture technology is so important. The report specifically mentions a company called Svante and their solid sorbent technology. They have the potential to reduce capture costs by as much as 30% in the next 5 years.
Wow, 30%, that would be a game changer.
It would. And the Energy Transitions Commission, they also emphasize that those kinds of cost reductions are essential if we want to see CCS deployed more broadly and more quickly.
Right, it has to make economic sense. And the last big challenge they talk about is infrastructure development. We touched on repurposing existing pipelines and platforms, but what's the bigger picture here in terms of building out a whole CCS network?
Well, the IEA, they estimate that we'll need a 100-fold increase in CO₂ transport and storage capacity by 2050.
100-fold, that's a huge number.
It is. It's a massive undertaking. Now, while using existing oil and gas infrastructure is a good starting point, it's clear that we'll need significant new investments in dedicated pipelines, storage wells, and all the related facilities.
So we're talking about a whole new industry, basically.
In a way, yeah. And S&P Global Commodity Insights, they really emphasize that this build-out of infrastructure is absolutely critical if we want to see CCS really take off.
It's a monumental task, but it also opens up a lot of new opportunities. And speaking of opportunities, the report goes on to highlight some really interesting strategic opportunities that CCS is creating for upstream operators. And one of the most intriguing is this idea of carbon storage as a service. So what exactly is that?
Basically, as these big regional CO₂ storage hubs start to develop, the oil and gas companies that have access to that underground storage capacity, they can essentially sell that as a service to other companies that are producing emissions.
So they become like landlords of carbon storage space.
Yeah, exactly. And the Oil and Gas Climate Initiative, they're projecting that this could be a $100 billion market by 2040.
Wow, that's a lot of money. So they go from extracting resources to actually helping to manage emissions.
Exactly. It's a pretty interesting shift.
Now, the next strategic opportunity they talk about is the potential for a low-carbon production premium. What does that mean?
So we're already starting to see this in the LNG market. There are reports from Morgan Stanley that say green LNG cargoes, LNG that's been produced with a lower carbon footprint because of things like CCS, are actually selling at a premium like 5 to 10% higher.
So it's like an organic label for energy.
Yeah, kind of. And the report suggests that as consumers and markets become more focused on sustainability, we could see the same thing happen with oil. So the companies that are early adopters of CCS, they could end up being able to sell their oil at a higher price.
That makes a lot of sense. And the last opportunity they mention is regulatory advantages. So how can government policies actually create opportunities for companies that are using CCS?
Well, things like carbon pricing mechanisms, whether it's carbon taxes or cap and trade systems like the EU ETS, those can really change the economics of CCS projects. Because when it starts to cost more to release CO₂ into the atmosphere, capturing and storing it becomes a lot more attractive financially.
Right, it tips the scales in favor of CCS.
Exactly. And those kinds of supportive policies can really help accelerate the adoption of these technologies.
So, from being seen as like a costly burden, CCS can actually become a way to make money and gain a competitive advantage. That's a pretty big shift in perspective.
It really is. And the report kind of sums it up by saying that CCS is moving beyond just being an emissions reduction tool. It's becoming a core strategic competency for oil and gas companies.
Right. It's not just about doing the right thing, it's about good business.
Exactly.
And they make a pretty bold prediction, they say, that by 2030, under some of the more aggressive carbon pricing scenarios, up to 75% of new oil and gas projects might actually need CCS to be economically viable.
Yeah, that's a pretty dramatic shift in a pretty short time frame.
It is. It's like CCS is going from optional to essential.
Right. And the message is pretty clear. The companies that embrace CCS early on are going to have a major advantage. They'll have more valuable assets, they'll be able to sell to more markets, and they'll be better positioned to thrive in a world that's increasingly focused on climate change.
So it's not just about being environmentally responsible, it's about the future of the industry.
Absolutely.
Well, this has been a really fascinating deep dive into the world of CCS. It's clear that this technology is much more than just a way to reduce emissions. It's really becoming a driving force of innovation and opportunity in the energy sector.
Yeah, it's been amazing to see how something that was initially focused on the environment is now becoming so central to the economics and the long-term strategy of such a massive industry.
And on that note, we're going to wrap up our deep dive for today, but we want to leave you with a thought-provoking question. As we move forward, what new innovations or maybe unexpected collaborations do you think will be essential to really accelerate the adoption and advancement of CCS? It's a question that's going to have a huge impact on the future of energy.
It really will.
Thanks for diving deep with us.